we will be looking at support and resistance level. And under support and resistance, we have a subtopic which is trend lines and trend channels. I will explain all of this, but now I need you to focus and get the concepts we are about to discuss. Because if you miss this concept, your forex journey will be shaky. You have to pay attention to one thing on the chart if you trade naked, which is price. Price is king. Price will tell you what you need to know. Take note, price is the current price at which the currency is at, which is the current bid price. The wonderful thing that all markets have is this: a history. The market will tell you where the sweet spot is on the chart. Now, this sweet spot will be the foundation for everything you do as a naked trader. The sweet spot on the chart is a support and resistance level. As for me, I call this support and resistance levels by one word, which is zones. Now, here are 6 important characteristics of these zones, and they are as follows. 1. Zones are an area and not a price point. The second, zones are spots on the chart where price reverses repeatedly. The third, zones are where naked traders find trading opportunities. The fourth, support and resistance zones rarely need to be modified. The fifth, line charts help naked traders find zones. The sixth, zones are often seen by many traders. Now, these are the 6 important characteristics of these zones. Now, support and resistance is the most basic and common form of technical analysis, and also one of the simplest to understand, and it's the most effective approach that many traders use in the markets today. Concentrate from now on, because it is incredibly important that you understand how to draw support and resistance zones, and why you should draw zones on your chart, and understand when these zones become critical for your trading. Support and resistance are basically horizontal lines drawn on the chart where price and human nature has reacted in a certain way in the past. So as human beings, we have this inbuilt processor that likes to repeat itself. We do the same thing on a daily routine because we did it the day before. We will have Christmas this year because we had Christmas last year. Now, this same human nature and approach you see in everyday life also happens in the price chart as well. I want you to take note of this. Support and resistance lines indicate a specific price on the chart where price reverses, while support and resistance zones are not a specific price. These zones are an area, or let's say a range. Zones are spots on the chart where price has pushed and propped, then reversed. Now, naked traders wait for price to reach these zones before initiating a trade, and it is absolutely critical that the naked trader identifies these zones on the chart, because these zones are the foundation of naked trading. If you take a look at any chart for any currency, you will find historical price levels. What you will notice is that price has a tendency to reverse at the same level repeatedly, and you may use this characteristic to define and discover zones on your currency chart. Now, let's define support properly. Support is a horizontal line or zone drawn where buyers overcome sellers. So if sellers are moving the market down, buyers start to overcome the sellers, and the trend reverses. They push the trend back up in the direction from which it came. Now, resistance now. Resistance found above support will be where sellers come into the market. The sellers start to overcome the buyers and therefore push the market down to where it came from. These zones are critical for the naked trader. Once price reaches a zone, the naked trader is on alert for a possible trade setup. Now, why would the naked trader want to know once price reaches a zone? Because price has repeatedly turned around these zones. Knowing what a market has done in the past is critical for the naked trader, not because the naked trader assumes the market will turn around again, but because the naked trader is on high alert and the market may turn around again. Now, the naked trader does not take trades based on price reaching a zone, but he uses several tools to decide when to take a trade. Now, these are the tools we'll discuss when we are discussing candlesticks. However, the naked trader will not take a trade unless price has reached a zone. And this is the first step for the naked trader when setting up a trade: price reaching a zone. We will now be looking at the subtopic under support and resistance. We will talk about trend lines and trend channels. Trend lines are linear support and resistance lines drawn on a chart to indicate the current trend of the market. Now, trend lines are formed when trend channels are drawn on the chart. Linear support and resistance are drawn going downwards or upwards, and by drawing a downward support and resistance, you will create a channel. Now, the big question is, what is a channel? Now, the path that follows and the area enclosed within it is called the price channel. The fundamental principle of how a channel is formed is based on support and resistance. Now, we have three major types of channels. We have the uptrend channel, the downtrend channel, and the sideways channel, which is also called the horizontal channel. The normal horizontal support and resistance levels is probably the most familiar, and they are easy to spot on your charts. Now, this is the New Zealand USD currency pair, as you can see here, and we are on the daily time frame. I want to use this chart to properly explain how to find your support and resistance and how to draw them and how significant they can be. Now, the first thing you should do is try to identify zones that you've noticed that price reversed a couple of times. Now, if I use this ellipse and mark zones that I've noticed that price reversed, let's say twice, I'll notice that there are some places that price reversed when it reached that point in particular. We have this point. Now we have this point and this point. You can see they are on the same zone here. What you will do is you pick a horizontal line, like I earlier said. Support and resistance, we use horizontal lines to find them on our charts. You can use this horizontal line, or you can use this rectangle line to draw your zones. If you pick this rectangle and draw it like this, you can see that we have gotten ourselves a zone. Now, I explained to you that resistance is a zone that sellers overcame buyers. Now, as you can see, price was pushing higher. It was pushing higher. When it reached to this zone, the sellers overcame the buyers for a little while, and then they pushed price below to this point. And then after they pushed price below to this level, and buyers overcame the sellers and they pushed price above this resistance here. I believe by now you understand the definition of support and resistance. A zone where price reverses a couple of times. You can see here 1, 2, 3. Price reversed here for the first time, the second time, and the third time. I told you that the chart has a history, and if price should one day push up to this level, let me use this. If price from this level decides to push to this resistance, we will likely have price push below down to this level again. Why? Because this zone is a resistance, and sellers might overcome buyers at this zone, because this is a significant resistance that a lot of people are seeing this zone. I told you that this is all collective human behavior, and if a lot of people see this zone and they know that if price reaches this resistance zone, buyers will take their profit, and then the buyers will no longer have strength to continue pushing the price up. Then we'll have sellers pushing the price down. And also we talked about support level, and if I should use that same rectangle again, if I should put it at this zone that I have this price, when price dropped to this level, the price pushed back up. If I should draw from that level up to this place, I can see that after price pushed from this level, it went back to this resistance, it respected this resistance, and then price dropped again and then consolidated for a while. Consolidation is price going sideways. It's not going up, it's not going down. Price now respected this resistance a couple of times. Price went back, came back down, went back, before finally breaking the support level. But then buyers once again overcame the sellers and they pushed price back up. Another resistance that we have is this place. Use this rectangle again. If I should draw this, when price dropped to this zone, it pushed back up. Why? Because this is a support level that it supported price to push back up, and then price dropped and it broke this support level. Then it went back to the broken support level, which is now our resistance. There's another thing you should understand here is, if price should break a support level and goes back to that broken support level, it will no longer be support, it will now be resistance. This is called support turned resistance. We also have resistance turned support. Like if, for example, let me remove this arrow. If this price should decide to come back to this zone, this would now be called a retest, because it has broken this resistance and it will come back down to this zone that it earlier broke. It will now be support level, then it will go back up, and this is called a retest. It will retest the broken resistance it earlier broke. We also talked about the subtopic under support and resistance, which is trend lines and trend channels. I told you that trend channels are formed when linear support and resistance are drawn on the chart, and I told you that linear support and resistance are drawn either going upwards or downward, and they are used to identify the current trend of the market. If you remember the terminologies we used, we said trend means the market that is either going up or it's going down. Now we use this linear support and resistance to know the current trend of the market. Is it going bullish or is it going bearish? I believe you still remember our terminologies. Bullish means it's going upwards and bearish means it's going downwards. Now if you want to draw your linear support and resistance, you can simply use this trend line tool here. You have all the tools here, they are all here, that and you can choose whichever one you want, and you can use this trend line. Now if I take a look at this chart well, now discover that this chart in general has been bearish from this zone. Price dropped to this place before it going back up. Now I will remove this so that we will be able to draw our trend line. Now you click on the trend line and then you find your lows and you draw it like this, and this is a support level, this is a support level. It means that price respected this bearish support level and it also respected this bullish resistance level. Now this is a linear support level, this is a linear resistance level. Now one thing that price understands is it knew that this zone is a support level, and because the current trend is bearish, it continued pushing downwards, giving us higher lows and lower lows. Now there are two types of support and resistance here. We have this bearish support level and we have this horizontal support level. We have this bearish resistance and we have this horizontal resistance. I told you we have different forms of resistance. Now this bearish support level helped price push from this level up to this level. Why? Because of this bearish support level. One way to identify significant support and resistance is by going to a high time frame. You can see that I started drawing my support and resistance on the daily chart. Now if you should say you want to let's say draw your support and resistance using the 5 minutes or the 15-minute chart, you will find yourself drawing a lot of support and resistance which will distract you. Why? Because there are a lot of fluctuations, like we earlier said on time frame analysis. So drawing support and resistance is best using the daily, the weekly, and the monthly, and also you can also use the 4-hour time frame. Looking at this 4-hour time frame, I can identify another zone from this zone here. You can see that when price reached to this support, it pushed back. When it dropped, it went back to this zone again, which is now our resistance. It dropped, pushed higher, came back down to this zone again as support level. It respected this zone as a support level and then it pushed higher. Now if we go back to our daily time frame, we will discover that we have two touches here. We have the first touch which pushed price back up and then it dropped, it went back up, and then this is the second on the daily chart. Now we also talked about channels. Now I told you that channels are formed when we have a linear support and resistance drawn on the chart. Now this is our linear support and this is our linear resistance. Now this means that this is our channel. And I also told you we have three types of channels. We have the bearish channel, and this is it, it's going bearish. And we have the bullish channel and the sideways channel. I mentioned it as an upward and downward channel. They are all the same thing. Upward is bullish, downward is bearish. Now this is a bearish channel. If I take a very good look at this chart, I can find a bullish channel. Now all you have to do is find a minimum of 2 swings in order to draw your linear resistance. Like this zone, this resistance, I have this pullback, I have this second pullback, I have this third pullback, and this fourth pullback. Now this gives me my bullish resistance. And if I should draw another one, I said a minimum of 2 swings. Now we have 1, 2, that means we have our bullish channel within our bearish channel. And this can also happen if price is making pullbacks. Price will drop for a while and then pull back up in order to recharge for the next drop, which is this case. The price pushed down to this level, then it started pushing up, giving us a bullish channel before dropping again. Now going back to the 4-hour time frame, you can see another bullish channel. I use my trend line again. I told you minimum of 2 swings. I have 1, 2, 3, 4, which indicates that the price is going bullish. Now I'll draw from this zone up to this level. Now this tells you that this currency pair, New Zealand USD, is now bullish. It has been bullish since from this point, which you can see this support level made it start going upwards, and then it started giving us higher highs. You can see this pullback did not come below this recent low, and also this pullback did not come below this recent low. Also this pullback did not come back below this recent low. The same thing goes for this pullback, and this is what we call higher highs. The market is making higher highs, and this is typical in a bullish trend. Now if I should use my trend line again, I'll have my bullish resistance at this zone. Now if I should go back to the daily time frame, you can see this is a bullish channel within this bearish channel. Here is another bullish channel, and I told you a minimum of 2 swings. Now here it is. We have this pullback, and pullback. We have this pullback when price dropped, pullback, it dropped, it pulled back. Now this is how to draw your linear support and resistance, horizontal support and resistance. And if you combine this support and resistance with candlesticks, which we will look at soon, you will find very nice trade entries and you will make profit.